Absorption costing. Absorption costing or total costing is the costing of products based on total costs. Total costs are equal to direct costs plus indirect costs. What are direct costs? Direct costs are costs that are directly linked to the production process. They are also known as variable costs, as they vary according to the volume of goods produced. If no goods have been produced, then these costs are nil. Examples of direct costs are direct or raw materials, direct labor, and direct expenses such as royalties. Now, what are indirect costs? Indirect costs are costs that cannot be linked to the production process. They are also known as overheads or fixed costs. They accrue and have to be paid even if no production has taken place. Examples of indirect costs are rent, heating and lighting, salaries, etc. Cost centers. A cost center is a center to which costs can be allocated. It can be a department, a process, a person, or equipment, for example, machinery. The two types of cost centers we will be coming across are basically production cost centers and service cost centers. What is a production cost center? Production cost centers are ones that are involved in the production process. For example, assembling, polishing, painting, molding, etc. What are service cost centers? Service cost centers provide services for the production departments. Examples: services provided by canteens, by stores or warehouses, repair and maintenance, etc. Allocated and apportioned costs. Costs can either be allocated or apportioned. So when are costs allocated? Costs which can be identified with cost centers are allocated to those centers. Direct expenses and some indirect expenses can be allocated. For example, food can be allocated to the canteen. The cost of paint can be allocated to the painting cost center. What you see in the picture is a meter. A meter allows one to read how much power or electricity was consumed. If each cost center in a business had one of these meters, then the power cost or electricity cost could be allocated to each of these cost centers. What are apportioned costs and when are costs apportioned? Most fixed costs or overheads are incurred by a business as a whole and cannot be allocated to specific cost centers. These costs have to be apportioned. For example, rent, depreciation, etc. Basis on which costs can be apportioned. Rent, insurance of building, and heating and lighting, when not metered separately, can be apportioned on the basis of floor area occupied by the cost center. Insurance of assets other than building are apportioned on the basis of replacement cost or on the historic cost of the asset. Depreciation of non-current assets is apportioned on the basis of cost or book value of the assets. Given alongside are overheads and the basis on which they could be apportioned. Study it carefully and use it when you get questions based on apportionment of costs in the exam. The following example on absorption costing has been taken from my book, Revising AS Accounting, a Study Guide. More information about this book and other books will be given at the end of this presentation. Let us look at the example. De Lima and Company have 3 production cost centers: assembling, painting, and packaging. They give you the following information. You will notice that the costs of direct materials, direct labor, and indirect labor are all allocated, whereas depreciation, factory rent, repair and maintenance, insurance, and heating and lighting will have to be apportioned. You are given 2 bases of apportionment: the cost of non-current assets and floor area. Let us look at the solution. The costs highlighted in yellow are allocated costs. Notice that prime cost is the total of all the direct costs, in this case, direct materials and direct labor. Depreciation, repair and maintenance, and insurance, highlighted in blue, are apportioned on the basis of the costs of the assets in the ratio of 40,000 is to 60,000 is to 20,000, or 2 is to 3 is to 1. Factory rent and heating and lighting, highlighted in pink, are apportioned on the basis of floor area in the ratio of 1,000 is to 500 is to 1,000, or 2 is to 1 is to 2. Once you have made all your calculations, total each column to arrive at the cost of production for each cost center. Adding all the costs of production, you will get the total cost of production, $369,600. This is a past paper question. Using the information given, apportion the budgeted overheads using a suitable basis. The solution is on the next page. Labor costs and the cost of food and materials are allocated. Rent and rates should have been apportioned on the basis of floor space, light and heat on the basis of kilowatt hour, advertising on the basis of guest days, equipment depreciation on the basis of equipment value, and office costs on the basis of guest days. Service cost centers in the manufacturing business. Sometimes cost centers could be service cost centers that provide services to each of the production departments. The support cost center of SP Limited in the previous 2 slides and the administration office as depicted in the picture below, or a canteen, are good examples of service cost centers. These cost centers do not produce or manufacture anything, but provide a service to the production cost centers, and without them, these production cost centers would be unable to function efficiently. Hence, the overheads incurred by these service cost centers are reapportioned to the production cost centers on a suitable basis. In SP Limited, in the previous slide, and as per the instructions given in the question, the basis to be used is guest days. The overheads incurred by the support cost center of $12,350 is now apportioned in the ratio of 12,000 is to 3,000 is to 5,000, or 12 is to 3 is to 5. Therefore, the amount apportioned to accommodation is $7,410. The amount apportioned to leisure is $1,852, and the amount apportioned to conferences is $3,088. For accuracy, it is always a good practice to subtract the other values from the total amount in order to calculate the last value. Reciprocal service cost centers in a manufacturing business. If a business has two or more service departments that provide services not only to the other production departments, but to each other as well, then the service departments are said to provide reciprocal services for each other. A good example of departments that provide reciprocal services would be the administration office of a business and the canteen. Both these departments provide services to all the production departments, but they also provide services to each other. The quickest way to apportion the costs of the services between service cost centers and production cost centers is by using the elimination method as shown in the next slide. In the following exhibit, the costs of the service cost centers are eliminated by eventually apportioning their costs to the production cost centers. There are two service cost centers, and hence they are reciprocal service cost centers. Let us look at the information given. Indirect labor costs and other indirect expenses have been allocated to production departments X, Y, and Z and service departments M and N as follows. $4,000 to production department X, $5,000 to production department Y, $5,000 to production department Z, $2,000 to service department M, which is a store, $2,000 to service department N, which is a canteen. Let's look at the next box. The first apportionment is to eliminate the costs of M. The costs of the store M are apportioned to the other four departments on the basis of store requisitions. That is, 100 is to 200 is to 150 is to 50. Therefore, these costs of $2,000 is eliminated. Look at the working in the first box with the pink banner. The new apportioned costs are added to the old costs, and the sum is as follows. $4,400 for Department X, $5,800 Department Y, $5,600 Department Z, and $2,200 Service Department N. The second apportionment is to apportion the costs of Service Department N, which is a canteen, to the other three departments X, Y, and Z, which are production departments. The costs of the canteen are apportioned to the other three departments on the basis of number of staff, and that is 50 is to 20 is to 30. Please note the number of staff in the service departments M and N are not included in the apportionment ratio. Look at the second working box with the blue banner to see the workings of the second apportionment. We now get a total of $5,500 for production department X after the second apportionment, $6,240 for production department Y, and $6,260 for production department Z. Important note, the costs to be apportioned in the second apportionment are $2,200 and not $2,000, which were the original costs. Don't forget to add the apportioned costs to the original costs before you make the second apportionment. The second point to note is $2,200 is apportioned in the ratio of 50 is to 20 is to 30. The other two departments that have been eliminated are ignored. Here is a past paper question for you to practice. Anna has a manufacturing business with 2 production departments and 2 service departments. You should take around 3 to 5 minutes to do this. Answers on the next slide. Here is the solution to the past paper question that was posed on the previous slide. Note, stores is another term for a warehouse. The basis of apportionment is usually the number of issues or requisitions made by each cost center. For a canteen, the basis is usually the number of staff in each cost center, as the canteen provides a service to the staff of every cost center. Absorbed costs. Absorption costing, as explained earlier, allows all the manufacturing costs per unit to be absorbed by each production cost center. This enables companies to determine the overall cost of production. Knowing the full cost of producing each unit enables the business to price their product. OAR, or overhead absorption rate. The overhead absorption rate determines the amount of a cost center's overheads to be added or absorbed by each cost unit that passes through that cost center. These rates are predetermined and calculated on the basis of budgeted production and overhead expenditure. There are different bases for calculating OARs, but the most common are the machine hour OAR and the direct labor hour OAR. Machine hour overhead absorption rate. The machine hour OAR is used when the means of production are capital intensive. The production process is predominantly mechanized, and the machinery running costs are greater than the direct labor costs. This OAR will consider the amount of machine hours required to produce each cost unit. Machine hours will also include costs such as repair, maintenance, and depreciation of machinery. Here is an example taken from my book, Revising AS Accounting, a study guide. Now let us look at the exhibit. A company gives you the following information. Product M, 100 units are produced, and 4 machine hours are used to produce each unit. Product N, 200 units are produced, and 1 machine hour is used to produce each unit. The budgeted overheads for June are $36,000. To calculate the budgeted machine hour OAR, you divide $36,000 by the number of machine hours, which is 4 times 100 plus 1 times 200, to give you an OAR of $60 per machine hour. The OAR for each unit of M works out to 60 times 4 equals $240. This is because M uses 4 machine hours per unit. The OAR for each unit of N is 60 times 1, which is $60. If the budgets were met, the total overheads would be absorbed as follows. 100 units of M, that would be 100 times 240, which is 24,000. 200 units of N, which would be 200 times 60, $12,000, to give you the total budgeted overheads of $36,000. Direct labor over absorption rate. Direct labor OAR is used when the processes are labor intensive, so that machine involvement is small and machine costs low, but labor costs are relatively high. Here is another example taken from my book, Revising AS Accounting, a Study Guide. You are given the following information for the month of July. Budgeted production of product K, 3,000 units. Budgeted direct labor hours per unit is 0.5. Budgeted production of product L, 5,000 units. Budgeted direct labor hours per unit 1.5. The budgeted overheads for the month is $45,000. Let us calculate the total budgeted direct labor hours for the month. That would be equal to 0.5 times 3,000 plus 1.5 times 5,000, which gives you a total of 9,000 direct labor hours. Therefore, the direct labor hour OAR is equal to 45,000, which is the budgeted overheads for the month of July, divided by the budgeted direct labor hours of 9,000, giving you $5 per direct labor hour. The OAR per unit of K is therefore 2.50, and for that of L is 7.50. If the budgets are met, the total overheads will be absorbed as follows. 3,000 units of K, $7,500. 5,000 units of L, $37,500, to give you a total of $45,000. Going back to Anna in slide 13, you are required to calculate a suitable absorption rate for both production departments, assembly and machining. Let us look at the budgeted annual data available. You will notice that the direct labor hours in the assembly department is much more than the direct labor hours required by the machining department. Hence, we can conclude that the assembly department is more labor intensive. Looking at the machine hours, we notice that the machining department uses more than double machine hours at 5,500 compared to assembly that uses only 2,500 machine hours. Hence, we can conclude that the machining department is capital intensive. Let's go to the other part of the slide where the OARs are calculated. In the green box, the OAR for the assembly department is calculated. Assembly is obviously labor intensive. Hence, the OAR will be calculated using the total direct labor hours. As the total overheads for this department was $40,225, the OAR for the assembly department is $40,225 divided by 6,000, which is the total direct labor hours used by this department, to give us an OAR of $6.70 per labor hour. Let's move on to the blue box. Machining is obviously a capital-intensive department. Hence, the OAR will be calculated based on machine hours. As the total overheads for this department was $54,525, the OAR will be $54,525 divided by 5,500 machine hours to give us an OAR of $9.91 per machine hour. This is additional information given about Anna's company in the last slide and in slide 13. A typical order for a batch of 1,000 circuit boards requires the following. You've been given direct materials costs, direct labor, machine hours, and selling and administration costs. You are required to calculate the total cost per unit based on a batch of 1,000 units. Let us look at the solution. Direct materials is already given at $48,000, no calculation required. Direct labor for assembly would be 500 hours at $12 per hour, which gives you a total of $6,000. Direct labor for the machining department is 300 hours at a rate of $8 per hour to give you a total of $2,400. Production overheads, however, will be calculated based on the overhead absorption rates calculated in the previous slide. Production overheads for the assembly department, which is labor intensive, we will take the labor hours over there of 500 hours, multiply that by the OER of 6.70 to give you a total of 3,350. The production overheads for the machining department, we will take machine hours, which is 500 hours, times the OER calculated in the last slide of $9.91 to give you a total of $4,955. Total all that up and add selling and administration costs to get a total cost of $71,705. Dividing that by the number of units, you get the cost per unit of $7.17. There are other bases for calculating OERs apart from direct labor or direct machine hours. These are direct wages OER, direct materials OER, prime cost OER, or cost unit OER, out of which cost unit OER is used quite often, and that would be the total overheads divided by the number of units to give you your OER. Overabsorption. Overabsorption takes place when actual expenditure is less than budgeted expenditure and/or actual production is more than planned. Let us look at an example from my book. A company's budgets for overheads expenditure of $20,000 in July and for an output of 5,000 units. The OER is $3 per unit. This is your budgeted OER. Calculate the overabsorption of overheads in each of the following cases. Let us take case 1, where the actual output for July was 5,080 units, and the actual expenditure equaled budgeted expenditure. Therefore, overabsorption, or sometimes referred to as over-recovery after the production has been carried out. So over-recovery of overheads is 80, which is 5,080 minus 5,000, times 3, which is $240. Let's look at a second example. Actual expenditure was $17,000 and actual output equaled the budgeted output. In this case, overabsorption or over-recovery, if production has taken place, of overheads would be the budgeted expenditure of $20,000 minus the actual expenditure of $17,000 to give you $3,000. I always tell my students, in order to tell the difference between over and under absorption, when there appears to be a profit, in inverted commas, then over absorption has taken place. Under absorption of overheads. Under absorption takes place when the actual expenditure is more than budgeted and/or actual production is less than planned. Let us look at the same example. A company budgets for overhead expenditure of $20,000 in July and for an output of 5,000 units. The budgeted OER is $3 per unit. Calculate the underabsorption of overheads in each of the following cases. Case 1. Actual output for July was 4,800 units. Actual expenditure equaled budgeted expenditure. The answer: there is an under recovery of overheads of 200 times 3 equals to $600. How did you get the 200? That would be budgeted output of 5,000 minus actual output of 4,800. Therefore, there's an under recovery of overheads of $600. Let's look at a second example. Actual expenditure was 22,000. Actual output equaled the budgeted output. In this case, there is an under recovery of overheads of 22,000, which is actual expenditure, minus 20,000, which was budgeted expenditure, equals to $2,000. Tip: when there appears to be a loss, inverted commas, under absorption has occurred. More information about AS Accounting, a study guide. The content of this book matches the latest CRE AS syllabus and is pitched at a level that is extremely workable. The book is written by a qualified and experienced teacher and fills the need for a guide that is solely meant for the CRE AS Accounting course. Some salient features of the book are: it unpacks the CRE AS Accounting syllabus. IAS terminology has been used. Students love the unique question and answer presentation of theory. There are numerous tips for success and exhaustive exercises for practice. This book is available at most book outlets worldwide, including Book Depository and Amazon. They are available in hard copy as well as in e-book format. Here are other titles available: AS Accounting Workbook, a write-in workbook that will help you prepare for your examinations, and Revising A-Level Accounting. Please contact me at junebaptista@hotmail.com for more information and for answers.